This is Steve Wolf, and this is our monthly edition of what happened last month. Today is February 1st, so we're going to be reviewing January of 2022 today. Now, as all of you probably know, or many of you, most of you know, this was not a fun month in January. So, you'll be forgiven if you don't want to look at your statements this month because they're certainly going to be down a little bit. And in some places they're going to be down maybe a little bit more. And before we get going here, I do have to get some legal business out of the way and just let you know that what I'm going to say is strictly for informational purposes, and it's not meant to be a recommendation. So before you buy or sell anything relating to anything I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure it's the best recommendation for your personal situation. All right, so let's get to what happened last month. By the end of the month, the Dow Jones was down about 3.4%. The S&P index was down about 5.3%, and the NASDAQ was down about 9%. But I have to tell you, that really doesn't tell the story. That doesn't sound all that bad. But this was the biggest decline for the S&P since March of 2020 when the pandemic started. And it's actually the worst January since 2009. So it's been a long time since we've seen something like this happen in January. Now, as far as the NASDAQ was concerned, which is really the tech-heavy index of all of them, at one point in January, the NASDAQ index was down by about 18.5% from its high back on November 19th, and this was according to the New York Times. But I got to tell you that there were many, many stocks. It really doesn't tell the story. There were many stocks that were down by 20, 30, 40, 50, even some 60 and 70% in the month. What happened? So what really happened here was the Fed got more aggressive. That's the first thing that happened. They finally have come to the conclusion that inflation was not just transitory, but that it's going to be more persistent. So what did they do? They became a lot more aggressive by saying they are going to start raising rates, and that's going to happen very soon. So the market itself certainly got spooked by the whole change in tone. And when that happened, the growth stocks, especially growth stocks that don't have earnings at the moment, and have been high flying and have been trading on revenues or some future earnings number, really got hit hard. The more solid companies, I'll say, the more mature companies, probably a better way of doing it, especially the ones that had dividends, didn't get hit nearly as hard. And quite honestly, today, being February 1st, we have some hindsight going here. Today was actually a good day in the market. Friday was a good day in the market. And we think maybe there was a churning here of the bottom. It feels like a bottom. Doesn't mean it is. Things could still get worse. But truthfully, when you have some stocks that are down 40, 50, 60, 70%, either those companies are going out of business or there's some good opportunity there, and they're probably not going down as much. Some of the bigger companies now have come out with good earnings here in the last few days, and that's helping the market. The ones that aren't coming out with good earnings, they're getting hit pretty hard. So you got to remember that the stock market is not the economy, and that's an important thing to remember. The economy right now is pretty strong, and because it's strong and because there's this supply chain issue, and of course the other thing I didn't mention, I guess I should have, is what's going on with Russia and Ukraine. That also spooked the market a lot, where Russia was putting troops around the border of Ukraine, and they've been threatening possibly to go in there and take over the country. So between that and inflation and just general high valuations, and the valuations were fairly high, the markets came down a bit. We've been talking about high valuations for a while. Not terribly surprised that we've seen some prices coming down. I'm a little surprised by the velocity, by how quickly it would happen. And actually, I'm really surprised by some of the small stocks getting hit. I think my personal opinion is way beyond where they should be in many cases, especially the small stocks that are making money or are about to go into their next phase of actually having nice earnings and some nice profits. So when we look ahead a little bit here, what's going to happen? The market is pricing in about 5 different rate increases by the Federal Reserve this year. So if it becomes a case where inflation continues to get worse and worse and worse, well, the market's going to get hit a little bit more. A lot of analysts are saying that they don't see that happening. They think that as the supply chain issue gets better, and most people think it is starting to get better, as that gets better, we'll come back to a little bit more normal supply-demand balance, and that could keep inflation from running off the rails. So if that happens, then I think you're going to see a pretty good second half of the year, or at least not a terrible one like we've seen here lately. But I really do think that the market will come back once that happens. And it may be that it's starting to do that now, because remember, the market is a forward-looking mechanism. So with all that's going on here, I know I always tell you about my bull and my bear. I still don't think we're in a bear market, even though there's certain stocks certainly that have crossed that threshold. But I don't think the economy is that bad. I believe that we'll be okay in time. You just have to have a little bit of fortitude here and just wait this thing out. And I believe that you'll see by the end of the year that the markets really will be coming back. So in the meantime, that's what's happened in January of 2022. We'll be back again next month to let you know what happened in February.